Are you wondering which companies will make the 2022 Dividend Kings list? Well, in this video, I'm going to cover each of the 32 companies on the 2021 Dividend King list, along with the 5 most likely to get included, for a total of 37 companies. To be sure, we have no reason to believe they won't get included. The list is in alphabetical order, so there's no favorites. Now, you might have heard about the Dividend Aristocrats, a group of 65 blue-chip stocks in the S&P 500 index that have each raised their dividends for at least 25 consecutive years. But there's a lesser-known group of stocks with even more impressive dividend streaks, and this exclusive group is known as the Dividend Kings. To be a dividend king, the companies must have increased their dividends for at least 50 years in a row. However, unlike the dividend aristocrats, dividend kings don't need to be listed on the S&P 500. And dividend kings come from a variety of different market sectors. However, companies on the Dividend Kings list always share a few key qualities. Number one, they have durable competitive advantages, long-term growth potential, and a proven ability to outlast recessions. Since you're looking at quality dividend stocks, you might want to research them. And for that, I wanted to introduce to you Sure Dividend. Sure Dividend helps investors like you and I find high-quality income securities for their retirement and financial freedom portfolios. And the Sure Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. They also do a great job at analyzing the Dividend Kings, and I use their service myself, even to research companies for videos that I create here. So, if you'd like to support the channel, go ahead and take a look at the Sure Dividend link in the description below, and stay tuned because I'll be giving you a promo code that you can use for a $41 discount off their newsletter. Alright, so let's get started. The first company on the list of 2022 Dividend Kings is 3M, a diversified industrial conglomerate. It manufactures a massive number of products, over 60,000, that get used each and every day in homes, hospitals, office buildings, and schools worldwide. Its business segments include safety and industrial, healthcare, transportation and electronics, and consumer products. 2020 was a difficult year for 3M, as it was hit hard by the economic downturn in the US and international markets. However, the company has durable competitive advantages that have allowed it to navigate through many rough periods successfully, and this is no different. Things are looking up for 3M. In the first quarter of 2021, revenue increased 10% from the same quarter last year, and as a result, adjusted earnings per share increased by 27%. Organic growth was 8%, with each segment posting at least high single-digit growth. Next, we have Abbott Laboratories, founded in 1888. Today, they're one of the largest medical appliances and equipment manufacturers in the world. Their products and services are comprised of 4 segments: nutrition, diagnostics, established pharmaceuticals, and medical devices. Abbott Laboratories provides products in over 160 countries and employs 109,000 people. The company generated $35 billion in sales and $6.5 billion in profit in 2020. On December 11, 2020, Abbott Laboratories declared a 45-cent quarterly dividend, marking a 25% year-over-year increase. This was the company's 388th consecutive payment and 49th straight year of increasing its dividend. And I see little reason why they won't increase this for a 50th straight year. Next on the list we have Abbvie, a biotech company focused on developing and commercializing drugs for immunology, oncology, and virology. Abbvie was spun off by Abbott Laboratories in 2013. And Abbvie has become one of the largest players in the biotechnology industry, especially following the closing of its acquisition of formerly independent pharma company Allergan. Its most important product is Humira. Humira is a multi-purpose pharmaceutical product and was the top-selling drug in the world. Humira is now facing biosimilar competition in Europe, which has had a noticeable impact on the company. It will lose patent protection in the US in 2023. And like Abbott Labs, with 49 years of consecutive dividend increases, Abbvie is not currently a dividend king. However, there's no reason to believe that they won't increase the dividend again in late 2021 or early 2022. ABM Industries is the fourth company on the list of 2022 Dividend Kings, and a leading provider of facility solutions, which includes janitorial, electrical and lighting, energy solutions, facilities engineering, HVAC and mechanical, landscape and turf, and parking. ABM Industries has increased its dividend for 53 consecutive years, which makes the company a dividend king. ABM Industries has announced that it will acquire janitorial services and engineering company Able Services in a deal that values the target at $900 million. This should be a primary growth catalyst for ABM moving forward. Next on the list of 2022 Dividend Kings is Altria Group, a tobacco giant with its flagship Marlboro brand. But the company has increasingly expanded its portfolio in recent years due to the long-running trend of falling smoking rates. Altria owns multiple smokeless tobacco brands, and it also has a wine business under the St. Michel brand and owns 10% of the global beer giant Anheuser-Busch. More recently, Altria targeted two additional categories for growth: vaping and cannabis. Altria owns a 35% stake in e-cigarette maker Juul and a 45% stake in cannabis producer Cronos Group. The company is also rolling out its own heated and vapor products, such as Marlboro Heat Sticks and IQOS, both of which are slowly gaining expansion across the United States. In the meantime, Altria's legacy tobacco products are cash cows, allowing the company to pay a high dividend yield of 7.96%. The company has a target dividend payout ratio of 80% in terms of annual adjusted earnings per share. American States Water has been a dividend king for 16 years and is a water utility with two business units: utilities, which is primarily water, but they offer some electricity, and services, for example, wastewater services on several U.S. military bases. The company's services unit spans several U.S. states. Water is arguably the most recession-resistant industry in the entire economy. Indeed, this is because water is a basic necessity of life, and this simple fact provides the company with steady demand from year to year. So even with the worst economic recession, everyone is still going to need water. The certainty of demand and the company's ability to pass on periodic rate increases has enabled a long history of dividend increases to shareholders. For example, it has increased dividends for 66 consecutive years, and the only other company to match this streak is Dover Corporation. By the way, if you think 66 years of dividend increases is amazing, go ahead and give me a like on this video because I know I do. The company's current policy is to achieve a compound annual dividend growth rate of more than 7% over the long term, just as the company announced a 9% increase in its quarterly dividend for the September 1st dividend payment. Next on the list is Becton Dickinson & Company, or BD, a global leader in the medical supply industry. The company was founded in 1897 and has 72,000 employees across 190 countries. The company generates about $20 billion in annual revenue, with approximately 43% of revenues coming from outside of the United States. BD is composed of three segments. Products sold by the medical division include needles for drug delivery systems and surgical blades. The life sciences division provides products for the collection and transportation of diagnostic specimens. And the intervention segment includes several of the products produced by what used to be Bard. With 49 years of consecutive dividend growth, BD is expected to become a dividend king in 2022. A newcomer to the 2021 list of Dividend Kings is Black Hills, an integrated and regulated electric and gas utility that operates in Colorado, Iowa, Kansas, Montana, Nebraska, South Dakota, and Wyoming. Furthermore, it provides service to about 1.3 million utility customers. Its assets include generation, transmission, and distribution. Because of its regulated industry, Black Hills management expects long-term earnings per share growth of 5 to 7% annually, along with at least 5% annual dividend growth. The company is also in a really strong financial position, with a BBB+ credit rating from Standard & Poor's. And indeed, it's definitely helped Black Hills reach 50 years of annual dividend increases. Black Hills Corporation reported its second quarter earnings results on August 3rd. The company generated revenues of $370 million during the quarter, which was 14% more than revenues that Black Hills Corporation was able to generate during the previous year's quarter. Black Hills stock is one of the highest yielding Dividend Kings right now. Next on the list of Dividend Kings is California Water Service. They're the third largest publicly owned water utility in the United States. The company has 6 subsidiaries that provide water to about 2 million people, mainly in California, with some additional operations in Washington, New Mexico, and Hawaii. California Water Service reported its second quarter earnings results on July 29th. The company reported that its revenues totaled $213 million during the quarter, which was 21% more than the revenues that California Water Service generated during the previous year's quarter. California Water Service beat analyst consensus easily. Revenues were up because the company benefited from rate increases that were negotiated throughout the last year. Cincinnati Financial is next on the list and an insurance company founded in 1950. It offers business, home, auto insurance, and financial products including life insurance, annuities, property, and casualty insurance. As an insurance company, Cincinnati Financial makes money in 2 ways. It earns income from premiums on policies written and by investing its float, or the large sum of money consisting of the time value between the premium income and insurance claims. In the most recent quarter, earned premiums were up 10% year over year. For the first 9 months, total revenue was up 30% compared to the first 9 months of 2020. Company book value increased 6.45% since year-end to $73.49 a share. Next on the list of 2022 Dividend Kings is Coca-Cola, the largest non-alcoholic beverage company in the world. But the declining rate of soda consumption in mature markets like the United States poses a challenge. So in response, Coca-Cola has invested heavily in other products like juice and tea. Also, the $4.9 billion purchase of Costa gave it instant exposure to coffee. At the time of the acquisition, Coca-Cola stated that the global coffee market was growing at 6% a year. Coca-Cola's higher growth categories have it with favorable long-term prospects. As a result, company management expects long-term organic sales growth of 4 to 6% a year, leading to earnings per share growth of between 7 and 9% annually. And this is more than enough growth for Coca-Cola to continue increasing its dividend each year, as it's done for each of the last 59 years in a row. Colgate-Palmolive is the next dividend king and a consumer staple company with an extensive portfolio of famous brands, including Colgate, Palmolive, Tom's of Maine, Ajax, and Hills. The company has a unique advantage, which is its elevated level of exposure to emerging markets. Indeed, these are underdeveloped nations that broadly have higher rates of economic growth than more developed markets like the United States and Canada. Colgate-Palmolive generated 44% of its 2022 revenue from emerging markets, such as markets in Latin America and Asia Pacific. As a result, Colgate-Palmolive could have better long-term growth prospects than the typical dividend king. In the meantime, the company continues to reward shareholders with a rock-solid dividend. Colgate-Palmolive has paid uninterrupted dividends on its common stock since 1895. Now, while Colgate shares have a current dividend yield of 2.31%, Colgate-Palmolive has also increased its dividend for 58 consecutive years. Next on the list is Commerce Bank shares, founded in 1865 and is a bank holding for Commerce Bank. It offers general banking services to its customers. Further, it operates branches in Colorado, Kansas, Missouri, Illinois, and Oklahoma. Its services include retail and corporate banking, as well as asset management, investment banking, and other offerings. Commerce Bank shares reported its third quarter earnings results on October 19th. The company generated revenues of $352 million during the quarter, which was up 2% from the previous year's quarter. At the end of the quarter, Commerce Bank shares' loan portfolio totaled $15.1 billion, while deposits stood at $28.1 billion at the same time. Commerce Bank shares' provisions for loan losses declined versus previous quarters. Dover Corporation is a diversified global industrial manufacturer with annual revenues of approximately $7 billion. The company comprises of 5 reporting segments: Engineered Systems, Fueling Solutions, Pumps and Process Solutions, Imaging and Identification, and Refrigeration and Food Equipment. More than half of the revenues come from the United States, with the remainder coming in from international markets. Dover has now increased its dividend for 66 consecutive years, making it and American States Water the 2 companies with the longest dividend growth streaks on the Dividend Kings list. And the stock has rewarded investors with annual returns above 13% in the past 10 years. Okay, so before I get to the next company on the list of 2022 Dividend Kings, remember that promo code I mentioned earlier for the Sure Dividend newsletter? Well, because you're watching this video, you can go ahead and use my coupon code, FIM41OFF, to lock in savings of $41 a year and get instant access to the newsletter with a 7-day free trial. Check the link in the description below for more information. Emerson Electric is the next company on the list of 2022 Dividend Kings and has raised its dividend for 64 consecutive years. Emerson Electric is a global leader with a presence in more than 150 countries and operates in 2 segments: Automation Solutions and Commercial and Residential Solutions. The Automation Solutions segment, which generates about 63% of the total revenue, offers industrial equipment and software to the oil and gas industry, refining, power generation, as well as other industries. The Commercial and Residential Solutions segment, which generates the remaining 37% of total revenue, offers residential and commercial heating and air conditioning products. Founded in 1916, Farmers and Merchants Bancorp is next on the list and a locally owned and operated community bank with 32 locations in California. It's a small cap stock with a market cap below $1 billion. Nevertheless, F&M Bank has paid uninterrupted dividends for 86 consecutive years and has raised its dividend for 56 consecutive years. The company is conservatively managed and, until 5 years ago, had not made an acquisition since 1985. In late October, F&M Bank reported financial results for the third quarter of fiscal 2021. Despite the suppressed prevailing interest rates, the bank grew its earnings per share 19% over last year's quarter. Federal Realty is the only real estate investment trust, or REIT, on the list of Dividend Kings. As a REIT, its business model is to own real estate properties and lease them to various retail tenants. Federal Realty concentrates in high-income, densely populated coastal markets in the United States, allowing it to charge more per square foot than its competition. Federal Realty reported second quarter earnings on August 4th, 2021. FFO per share came in at $1.41, up 77 cents in the year-ago quarter. Total revenue came in at $231.6 million, up 31.4% in the same year-ago quarter. The company acquired 4 assets totaling 1.7 million square feet on 125 acres of land at a gross value of $407 million. And during the second quarter, they also signed leases for 558,000 square feet of comparable space. Next on the list of 2022 Dividend Kings is Genuine Parts Company, a company that got founded in 1928, and since that time it's grown into a conglomerate that sells automotive and industrial parts, electrical materials, and general business products. Further, Genuine Parts' flagship business that you know and love is Napa Automotive Parts Stores. The company has a long history of steady growth. In its 93 years as a company, both sales and profits have increased nearly each and every year. Genuine Parts expects to pay a cash dividend of $3.26 per share for 2021, representing a 3% increase over 2020. Further, it means in 2021 the company's 65 consecutive years of paying increased dividends, which gives it one of the longest streaks among the Dividend Kings. Okay, so H.B. Fuller is the next Dividend King on the list and is a leading global manufacturer of adhesives, sealants, and other specialty chemical products. The category of industrial adhesives is its core product. In late September, H.B. Fuller reported financial results for the third quarter of fiscal 2021. Despite some shortages in raw material and packaging, organic revenue grew 16%, with 10% from volume growth and 6% from price hikes, thanks to strong demand and market share gains. Organic revenue grew 13% over the non-COVID impacted third quarter of 2019. Due to high material costs, adjusted earnings per share grew only 4% over the last year's quarter. H.B. Fuller has increased their dividend for 52 consecutive years. Alright, so next on the list of 2022 Dividend Kings is Hormel, a large food products company that generates annual sales of approximately $10 billion. Some of its core brands include Skippy, Spam, Applegate, Justin's, Jenny O, and more than 30 others. These brands have led to steady growth for years. Since 2010, Hormel's diluted earnings per share grew at an annual rate of 8.6% through 2020. This type of consistent growth has allowed Hormel to increase its dividend for over 55 consecutive years. And Hormel's impressive history of growth is due to its brand strength and defensive nature of its products. Hormel products are either number 1 or number 2 in over 40 categories. These brands also hold up exceptionally well during economic downturns. Next we have Johnson & Johnson, the largest U.S. healthcare company and number 21 on the list of 2022 Dividend Kings, with a market cap above $400 billion and over $80 billion in annual sales. Johnson & Johnson has a diversified business model across pharmaceuticals, medical devices, and consumer health products. The company has 28 individual platforms or products that each generate over $1 billion in annual revenue. Johnson & Johnson holds leadership positions across the healthcare spectrum that has enabled strong growth over many years. Johnson & Johnson has averaged 6% operational sales growth and an 8% adjusted earnings per share growth each year for over the past 20 years. Also, in 2020, the company generated over $20 billion of free cash flow. Such a strong level of cash generation means the company can reward its shareholders. Indeed, Johnson & Johnson has increased its dividend payout for 59 consecutive years, and the stock, well, it currently yields around 2.5%. Next, we have Kimberly-Clark Corporation, a global consumer products company that operates in 175 countries and sells disposable consumer goods, including paper towels, diapers, and tissues. It operates through two segments that each house many popular brands. First, we have the personal care segment that includes Huggies, Pull-Ups, Kotex, Depend, Poise, and the other consumer tissue segment that includes Kleenex, Scott, Cottonelle, and Viva, generating nearly $20 billion in annual revenue. Kimberly-Clark reported third quarter earnings on October 25, 2021, and the results were a little weak. However, total revenue was $5 billion in third quarter, up 7% year over year. Changes in Forex added 1% to the company's top line, and the net impact of the Softex Indonesia acquisition as well as exited businesses added a further 2%. Organic sales were up 4% in total, with 3% of that coming from net selling prices that were higher and the final 1% from product mix. Kimberly-Clark has increased their dividend for 49 years in a row, and you can bet there'll be a Dividend King in 2022. Next on the list of Dividend Kings is Lancaster Colony, and they've been making food products since 1969 after shifting away from housewares. The move has afforded the company some meaningful growth in the past 5 decades. The company generates $1.6 billion in annual revenue. Lancaster Colony makes various meal accessories like croutons and bread products in frozen and non-frozen categories. Lancaster reported fourth quarter and full year earnings on August 26, 2021, and the results were a little mixed against expectations. Total net sales were up 20% to a fourth quarter record of $386 million. Retail sales were up 11%, all while food service soared 33%, given the strength of quick service restaurants and pizza chain sales. Next on the list of 2022 Dividend Kings is Lowe's, a home improvement retailer operating more than 2,200 home improvement and hardware stores in the United States and Canada. And Lowe's is firing on all cylinders right now. It's benefited from multiple growth tailwinds, including low interest rates, as well as the robust housing and construction markets over the last decade. In fiscal 2020, Lowe's grew its net sales 25% to $89 billion. And as a result, adjusted earnings per share soared from $5.74 to $8.86. The company's impressive financial results allow it to return tons of cash to its shareholders. Lowe's expects to spend $9 billion on share repurchases during fiscal 2021. In addition, Lowe's has raised its dividend for each of the last 59 years, and by 13% a year over the last 5 years. National Fuel Gas is the next Dividend King on the list and is a diversified energy company. Its largest segment is exploration and production, which includes over 800 million cubic feet per day of natural gas production. The company also operates midstream infrastructure, such as pipelines and storage facilities. National Fuel Gas also has a downstream business with over 700,000 utility customers. National Fuel Gas is a rare example of a stable and consistent energy stock. The energy industry is notoriously cyclical, particularly when it comes to exploration and production activities that rely on the underlying commodity price. As a result, National Fuel Gas is the only energy stock on the list of Dividend Kings. It's also among the highest yielding Dividend Kings. Next, we have Nordson, a company that has increased its cash dividend for 58 consecutive years. Nordson was founded in 1954, but the company can trace its roots much further back to 1909 as the U.S. Automatic Company. Nordson engineers manufacture and market unique products used to dispense, apply, and control adhesives, sealants, polymers, coatings, and other fluids to test for quality, as well as to treat and cure services. Nordson has grown to $2 billion US in annual revenue. Now, Nordson is split into two business segments: Industrial Precision Solutions and Advanced Technology Solutions. The first segment is made up of adhesives, polymer processing solutions, and industrial coating solutions. The Advanced Technology Solutions segment is comprised of medical, electronic processing solutions, test and inspection, and fluid management. Next, we have Northwest Natural, a utility company that was founded in 1859 and now serves more than 760,000 customers today. It delivers natural gas to its customers in the Pacific Northwest, and the company has increased its dividend for the 65th consecutive year, making it one of the longest-standing companies on the list of Dividend Kings. The company reported second quarter results on August 5th, and revenue increased 10.3% year over year. Net income grew to $1.92 per share for the first 6 months of 2021. The company also added nearly 12,000 natural gas meters over the last 12 months, equating to a 1.6% growth rate. Meanwhile, the management team reaffirmed its guidance for 2021, with earnings per share expected to come in around $2.40 to $2.60. Next on the list of 2022 Dividend Kings is Parker Hannifin, a diversified industrial manufacturer specializing in motion and control technologies. The company was founded way back in 1917 and has grown to a market cap of $39 billion with annual revenues over $14 billion US dollars. Parker Hannifin has paid a dividend for 71 years and has increased its dividend for a remarkable 65 consecutive years. In early August, Parker Hannifin reported financial results for the fourth quarter of fiscal 2021. Sales and organic sales grew 25% and 22% respectively over last year's quarter. Next, we have PepsiCo, a global food and beverage company that generates $75 billion in annual sales. The company's products include Pepsi, Mountain Dew, Frito-Lay chips, Gatorade, Tropicana orange juice, and Quaker Foods. PepsiCo has 23 separate brands in its portfolio that each generates at least $1 billion in annual sales. The company reported earnings results for the third quarter on October 5, 2021. Revenue grew 11.6% to $20.2 billion, which was $800 million above expectations. Adjusted earnings per share of $1.79 was a 7.8% improvement year over year and 6 cents above estimates. Organic sales were higher by 9%, and beverages overall had an 8% increase in volumes, while food and snack were up 4%. Now, with 49 consecutive years of dividend increases, PepsiCo is expected to become a Dividend King in 2022. Next, we have PPG Industries, the world's largest paints and coatings companies. Its only competitors of similar size are Sherwin-Williams and the Dutch paint company AkzoNobel. PPG Industries was founded way back in 1883 as a manufacturer and distributor of glass. In fact, its name stands for Pittsburgh Plate Glass, and today has approximately 3,500 technical employees located in more than 70 countries at 100 locations. The company generates annual revenues of about 17 billion US dollars. And PPG announced third quarter results on October 20th, 2021. Revenue grew 18.8%, beating expectations by $120 million. Now, with 50 consecutive years of dividend increases, PPG is a newcomer to the list of Dividend Kings. Number 31 on the list of 2022 Dividend Kings, we have Procter Gamble, a consumer products giant. And their notable brands include Pampers, Tide, Bounty, Charmin, Gillette, Crest, and so many more. Moreover, the company generated $71 billion in sales in fiscal 2020. Such an extensive portfolio of top brands has allowed P&G to reward its shareholders for decades. P&G has paid a dividend for 131 years and increased its dividend for 65 consecutive years. Procter & Gamble's dividend growth rate has accelerated in recent years thanks to its renewed focus on efficiency. In addition, P&G divested multiple slow-growth brands over the past 5 years. For example, they sold Duracell to Warren Buffett's Berkshire Hathaway and a collection of over 40 beauty brands to Coty. These efforts unlocked higher profit margins and therefore higher dividend increases. For example, the most recent annual raise was a 10% hike. SJW Group is the next company on the list of Dividend Kings. They're a water utility company that produces, purchases, stores, purifies, and distributes water to consumers and businesses in the Silicon Valley area of California and the area north of San Antonio, Texas. SJW Group has a small real estate division that owns and develops properties for residential and warehouse customers in California and Tennessee. The company generates about $570 million in annual revenues. And SJW Group completed its acquisition of Connecticut Water, formerly known as CTWS. SJW Group reported earnings results for the second quarter on July 29, 2021. Revenue improved 4.3% to $152.2 million, but missed estimates by $12 million. And earnings per share of 60 cents matched last year's result. Next on the list, we have Stanley Black & Decker. Today, the company ranks as one of the world's largest industrial products manufacturers, generating over $14 billion in annual sales. Its main products include, hand tools, power tools, and related accessories. It also produces electronic security solutions, healthcare solutions, engineered fastening systems, and much more. Despite the weak global economy, Stanley Black & Decker continues to generate solid profits and steady growth. And Stanley Black & Decker has a fantastic track record of dividend payments. The company has paid dividends for 144 years and has increased its dividend for each year of the last 54 years, solidifying its position as a dividend king. Next, we have Stepan Co., a dividend king founded in 1932, and at the outset, it only sold one product, a chemical to keep the dust down on Illinois' county roads. And since that time, it's grown to manufacture basic and intermediate chemicals, with surfactants making up most of the revenue. Now, the company generates approximately $2.3 billion in revenue per year, and they've increased their dividend for 54 consecutive years. Stepan reported third quarter earnings on October 20th, 2021, and results were well ahead of estimates for both revenue and adjusted earnings. Total revenue soared 30% year over year to $603 million. And total net income was $37 million, or $1.59 per share, both of which were higher year over year. All right, so Cisco is the next company on the list of Dividend Kings and the largest wholesale food distributor in the United States. It now serves approximately 600,000 locations, with food delivery including restaurants, hospitals, schools, hotels, and other facilities. And guys, it's no surprise that Cisco was badly impacted by the coronavirus pandemic, which caused the closures of restaurants, schools, and other places to dine. As a result, the company's sales and profits have fallen significantly. Over the first half of its current fiscal year, Cisco sales fell by 23% compared with the same 6-month period a year before. Now, while Cisco was hit hard by the pandemic, it also stands to benefit from the recovery significantly. And this explains why Cisco stock is trading at near all-time highs. All right, so number 36 on the list of 2022 Dividend Kings is Toosie Roll, a company that traces its roots back to 1896 when Leo Hirschfeld began selling his candy from a family recipe in his shop in Brooklyn. He then went to work for the Stern and Salberg Company, which later became the Sweets Company of America, and eventually morphed into the company we know today. The company produces around $500 million in annual revenue in normal years, and has raised their dividend for each of the past 52 years. And yet, the vast majority of sales are made in the United States, but they do sell in Canada as well as Mexico as well. Toosie Roll sells its products through a network of about 4,000 customers that include wholesalers, discount chains, dollar stores, supermarkets, and the US military, among others. And last but not least, we have Universal Corporation, the world's largest leaf tobacco importer and exporter. The company is a wholesale purchaser and processor of tobacco that operates between farms and the companies that manufacture cigarettes, pipe tobacco, and cigars. Universal Corporation reported its first quarter earnings results on August 11th. The company generated revenues of $350 million during the quarter, which was 11% more than the revenues generated during the previous year's quarter. And with 50 years of dividend increases, Universal is also a newcomer to the Dividend Kings list. So 32 out of the 37 companies that I talked about today were already on the list of Dividend Kings in 2021. No doubt these are solid companies and leaders in their respective industries. And due to the company's fundamentals and dividend-friendly management, I fully expect that the remainder to be on the list of 2022 Dividend Kings. Now, which company is your favorite? Do you own any of them? Go ahead and let me know in the comments below, because I love reading and responding to your comments. In the meantime, thank you so much for watching, and I hope to see you in another video. Bye.